Three, two, one. Welcome to the SaaS Pulse Show. My name is Michael Bertoni, and I'm the founder and CEO of SaaS Talent. And unbelievably excited today, everyone. We have a leader in the industry, a thought leader in equity crowdfunding. I read it on his LinkedIn profile, so it has to be correct. He is top 10 global thought leader in equity crowdfunding. Amazing. Oscar Jofre, hopefully I'm saying your name right, Oscar Jofre. He's the co-founder and CEO of KoreChain. That is his most recent company. He also has a company, KoreConX, and this is with a K. So if you're in blockchain, if you're in equity crowdfunding, you probably know who Oscar is. So it is unbelievably great to have you on the show, Oscar.
Great to be here, Michael. I'm looking forward to it.
Yeah, this is great. So what I always like to start with, Oscar, is the superhero backstory, right? So the backstory. So everyone has a superhero backstory. I love superheroes. I'm a huge Superman fan. So how did you get to KoreConX and KoreChain? Like, how did that happen, right? So what was your backstory? Like, I love talking about this too, because I think you're going to have a good one. So how did you come to be? How did you create KoreConX and KoreChain?
It's so important sometimes to get to the root of it because we all have a journey as entrepreneurs and what we do. And I was working in the public markets, enjoying the life that we all see, working with publicly traded companies, providing technology. But I'm still deep inside an entrepreneur. And I had the fortunate, and I do call it fortunate, to meet a man that forever changed my life 14 years ago. And his name is David Weil IV,
Nice.
former vice chairman of NASDAQ, and who is now considered by the Senate and Congress and all. They call him the father of the Jobs Act that President Barack Obama signed in on April the 5th in 2012. When I met him, even prior to that, when he was, putting it together, he was talking about democratizing capital. I mean, allowing every person who doesn't get to participate to invest and giving every company an opportunity to fulfill their dream of building their entities. As an immigrant, that touched me. I mean, anybody who is an immigrant or ethnic or your color, your skin, or where you're from, when you have an accent, this was the equalizer that I saw. And from that day, I never looked back. I started embracing myself, learning everything from the teacher himself, David Weil IV, and then, of course, others like Sarah Hanks, Douglas Elanoff, and many others that they were writing the laws. So I entrenched myself, and then I wrote the first book. I wanted others to see that, and I published a book called Equity Crowdfunding 101 in 2015. Over 30 million copies were given for free, both in English, Spanish, and Mandarin.
Nice.
So it became a global way for people to understand. So the irony to what is equity crowdfunding? Equity crowdfunding, really what it is allowing investors, everyday individuals over the age of 18, not the one percenters, not just the accredited, everyday people who work hard every day, who want an opportunity like everybody else to be able to make and participate in an opportunity where it could give them a great return. And so that's what equity crowdfunding is. It's reaching out to the crowd. And there's nothing more exciting for any type of company to be able to bring those who love your product, maybe your clients, your customers, your partners, your family and friends, and now do it in a compliant way without having to worry whether you're going to be going to jail because of how you did it.
Right.
And so that's been my journey. And now what I do is Core is the foundation of everything that I do. These are the companies that we have: KoreChain, KoreConX, Core Issuance and Platforms. All these entities, they're part of Core. What is Core? Core is the infrastructure for everyone to be able to participate, to be able to invest seamlessly on any given website that you may see, for companies to be able to take on not 100 investors. How about 1,000? How about 10,000? How about 1 million investors from 86 countries around the world? And that was the holy grail that the Jobs Act provided. And so, but in order to do that, you needed something to hold it together, something that would make it seamlessly, to be able to be done, fully electronic online, where the traditional way, I get on the phone, I talk to Michael. Hey, Michael, how you doing? I'll send you the deck. You review the deck, and then I send you the paperwork, or we meet in a coffee shop. You can't do that with this environment. Why? Because the investors are investing smaller amounts.
Mm-hmm.
They're using Visa, MasterCard, or crypto to pay for their securities.
Right.
So it needs to be seamless, fast, and there's also a regulatory participant, an intermediary that's regulated by FINRA, who then needs to review that information to make sure the investor is compliant and so on. So a lot of different participants to bring in. And so my journey in this started very early on. That's one of the reasons why I've been able to be a voice for the sector. Even though I've been doing this, 14 years, it wasn't until 2016 that we officially launched as a company. And just so you know, the sector, it came into act by President Obama on April the 5th, 2012. It took the regulators another 3-4 years to bring the regulation. We are only 7 years old as a sector in doing online, capital raising or equity crowdfunding, or online capital formation. There are many different forms of it, but or words that people use. And how impactful is this? Well, for everybody listening, in the private capital markets today, there was $4.5 trillion raised just in 2023 in the private markets. And online capital raising generated 150 billion of that. In 2012, it was zero. In 2013, zero. So in a very short period of time, we've been able to penetrate already 150 billion out of this big pie. So what does that tell you? Investors like it. Not only that, the investor pool is not just the high net worth. It's not just the one percenters anymore.
Right.
Today I had a meeting with a company that, for the very first time, all this entrepreneur ever wanted to do was to give an opportunity for everyday people to profit from what he's doing, not just the venture capital, which are good. There's nothing wrong with venture capital or private equity. But this was a way for him to balance. For the very first time, he could actually take his product, have everyday people put in $100 in his company, make a return, and be happy. And I think that's the most enjoyable part of what I do. Even though I'm a technology company, I'm still on the front lines because I do a lot of education to make sure that people understand the impact this can have on a company and a society in general.
Yeah, we definitely got to talk more even after this podcast. I mean, there's this whole revolution going on that I see with companies in the SaaS markets bootstrapping,
Yes. Yeah.
and also, not wanting to give up equity. Obviously, I'm not sure exactly how it works. I want to learn more with how you do it. My gut tells me you're not giving up the farm, when you're doing this, right? So tell the audience what I am super excited about. Give us the elevator pitch, right? So give us the elevator pitch, the three, the quick summary. You're walking up in the elevator with your key ICP. What's Core? So what is Core? How is it helping people?
So Core is helping companies, SaaS-based companies, whether you're a pre-revenue company or generating revenue company, the ability to, within a very short period of time, be able to execute and start raising capital directly on your website, fully compliant with all the regulatory participants, the lawyer, the auditor, the FINRA broker-dealer, the SEC transfer agent, the escrow bank, all of that. So we bring an infrastructure in a box for you where you just put in what you need, and we don't have any bias. So we're not a venture capital firm. So we're not saying, hey, John, your deal's too early. Joe, you're too late. Joe, you're too in the middle, but you're not too. We're not here to judge. We're like what the regulators have said. As long as you file your documents, you indicate how much money you want to raise, you met all the requirements, let the market decide. And what you can do as a company, here's the best part. My part is the compliance part. I keep you compliant. I make sure that and you don't have to give the money back. The number one question people ask me, Oscar, give me an example of success. Success in raising capital online is keeping the money without giving it back. That's success. That means that you did it compliantly. And that's what we do, seamlessly, compliantly in the background without any friction to the end user, to the company. But from a company perspective, imagine you can use one regulation, you can raise up to $5 million. You can bring in investors with as low as $100, and you can even incentivize the investor. So you can, so if a SaaS-based company, let's say, you bring in someone, they invest $500, you offer them, 6 months free of your service, fully compliant. It's not illegal, and it could be a product, it could be a service. We've had many companies that have done it with, ski trips, skis, vodka, beer, knapsacks, tents, cars, yes, electric cars. So why do people come here? It's because it's where the great equalizer. When David Wheel set out to create the regulation, it wasn't just about, yes, democratization was the cornerstone to it, but why? Why? Because in the United States in 2008, the financial collapse killed Middle America. And we all saw it in movies, right? We all saw what happened, and we go, oh my God, those guys, they got all the money. That's right. The bankers made cash,
right,
and everybody else got nothing. They lost everything. So being the vice chair of NASDAQ, he was noticing that less and less companies were going public. He was noticing that by the time the company went public, it wasn't about innovation anymore. It's about hitting their quarterly, target. You ever notice in public companies, they announce we need to lay off 25%? Why? To hit the target. Has nothing to do with innovation.
right.
So we needed to bring innovation back. And we needed to keep the owners in the owner's seat of a company. So the regulators, so if you think the value of your company is X, and you go out to the market and people invest in it, regulators have no issue with it. So as a company, you get to control that mechanism, but that mechanism comes with a responsibility. So imagine you've been given the opportunity to say, my company's worth $20 million. Excellent, not a problem. Nobody's going to argue with you. Why? Because these are smaller investors. But you now have a responsibility to them. What is that? You need to be engageable. You need to be a person that's going to remember these people never had a chance to build a company. This is their chance to be not hands-on with you building it, but they want to be engaged. They didn't just invest in this, they invested in what you're doing. They love what you're doing.
Sure.
So the one good thing is you're not going to have them on, your board meeting saying, hey, okay, you're spending too much money here. No, they want to help you grow. What can we do? And look, I'll give you one example of that. We took a company 6-7 years ago called BrewDog. BrewDog today in the United States, you're seeing these restaurants popping up everywhere. They're franchises, $10 million franchises. 6-7 years ago, it was a company that barely raised $1 million, $1 million. And it was a microbrewery. And there's a microbrewery now just about everywhere, right?
Everywhere.
So it wasn't distinctive. But the CEO was smart. The CEO was extremely smart and understood the concept of the crowd, understood how, wait a minute, my customers can be my stakeholders? Yes. And he also understood another thing, that if we treat our stakeholders like part of the company instead of just calling them shareholders, I can build something. And he did. Look at him today. It's a multi-billion-dollar company, all the money coming from the crowd.
Amazing. It's super exciting in terms of the product itself, right? So understand what you do. So you have a lot of different products there in the background. So give everybody so what's the platform do, right? What's the different, what are the top 3 things that the platform does for the client?
So for the client, number one is onboarding the client through a mechanism to meet the Jobs Act regulation. This is the deal room, where this deal room facilitates all the data gathering that then needs to be shared with your broker-dealer, your auditor, your bank, all the 17 other participants that are part of your raise, including the regulators, which then becomes the platform where you monitor your capital offering, which then is the platform where your shareholders are coming in under your brand and everything to log in to see what the status of their investment and so on. And then in the background, we're tokenizing your asset, fully compliant with the SEC. We're the first company that went through the front door of the SEC and went, knock, knock, knock. Here's what we've built. to meet your requirements. Knock on wood, it took us 3 years to get that recognition. It's called a qualification. We got both SEC and FINRA. Today, we're the only one. So we have a regulatory mode in our business that there's not a lot of people that, people can make splashes about tokenization and all that. Great. But if you haven't gone through the SEC, a company cannot use it to raise capital unless the regulators have qualified it. And that process does take time. So our clients, they can tokenize with ease, real estate, carbon credits, whatever that may be. So all of that is done. And we do it in such a way, Michael, that one of the things that I learned as an entrepreneur, and I've always been frustrated with other SaaS-based companies, it's not about your brand, it's about mine. And
Right.
that was a fundamental element of Core. So we're like Core inside. When you go to these sites, you go, how come I don't see you guys? Because that's the point. But building this, we were trying to remove the friction. There are two major friction points when online capital raising came in. You had lawyers and auditors,
Right.
broker dealers that have been doing their business for the last 40, 50 years. And come on, Michael, this is the way I do it, right? You know that
Right.
expression where this is the way I do things. And the problem with that is that that's friction. As well, they're regulated, so they have to collect certain information, all of them. And then two, they didn't trust each other. Yeah, Michael, I'm glad you did that, but I still got to do it. And what do you need? Because I need to do it. It's part of my rule book, and I got to do it. So once again, the company or the investor needs to pay. So because our infrastructure, our core chain was qualified by the SEC, you now have a trusted infrastructure that the regulator said, okay, yes, you can house data here. So as soon as you have that, that's part number one of an infrastructure, trust. Number two, now you need verified data. The only way you can have verified data if the people themselves who are putting it in are regulated. FINRA broker dealers, SEC transfer agents. So what do? They're the custodians by the regulators to ensure that, and once it's there, Michael now has a transportable data, and we call it the core ID. The core ID is an identity element of our infrastructure that gives you this frictionless way to move around. And as soon as you see the icon, you go, hey, I can use my core ID. Boom. And instead of spending 5 minutes or 10 minutes making an investment, now you spend 5 seconds because it already knows you. And that broker dealer on that end, or whoever that regulated entity goes, I can trust the data. Why? Because it already came implanted. So people will go, well, all of this has been there. No, it hasn't. You're thinking of the traditional way of raising capital. People shoveling paper back and forth, sending emails and contracts. This is all electronic,
Sure.
100%. And so we facilitate all that in the background. And every single day, people are transacting. Visa, MasterCard using their crypto in another form. And never is it about us. And this is one of the most exciting things about what we try to do is we're empowering companies to make sure that they build a relationship with their stakeholders, their shareholders. We're empowering the broker dealers to build relationships with both, so everybody's building a brand. And why is that important? Because in the United States, there's 38 million privately held companies. And just so everybody knows here how big this is, every single year, 145,000 plus companies raise capital. And the only ones you ever hear about is 1,200.
Right.
That's the opportunity that the Jobs Act presented that we're addressing today.
Massive, massive. So, Oscar, this has been a great podcast. We are blowing through time, just to let you know. So let me ask you my last question. Very, very important because I think you're going to give great advice here. So 2 to 3 biggest piece of advice. A lot of people listening, they're solopreneurs, they're thinking about starting something, right? What's your 2 or 3 biggest piece of advice that you would give them?
So I would say that for the very first time in history, you have a privilege not to abuse. And what do I mean by that is you've been given the power to you control it now. This is a new chapter in capital raising, right? Family, friends is one, banks and all that. This is another one, online capital raising fully compliantly. But you have a responsibility. You need to be an individual that has to be transparent, and you need to be engageful, and you need to be timely, aware, always aware that they're not coming at you, hey, Oscar, when are we going public? Hey, Oscar, what's going on? No, they just engage with them. So if you're going to be doing capital raising this way, people go, "Oh, Oscar, I don't want 1,000 people on my cap table." And I go, that's fine, but these are not shareholders. What do you mean? They're customers. So
Right.
you don't want 1,000 customers.
Right.
And
Love
they're
that.
like, "What do you mean?"
Gosh.
That's my point. You don't want 1,000 customers. Your customers can now be your stakeholders. How would you treat your customers? You get a CRM software, you email them, you invite them to parties. Okay, then keep doing that. That engagement, it will show them that you care, and you'll get actually even more output. So that's my only,
Wow.
and this is
Love that.
not something you can hack at it. No hacking at this. This is not, hey, I slap a pretty page and people will come. No, no, no. You're going to need to work at it. Everything's work. It's getting easier. It's more technology driven, which is great. We made all that happen for you and the infrastructure. But if you're dedicated to this, I've seen entrepreneurs flourish ideas that would never, Michael, ever. Like BrewDog is perfect example. If the Jobs Act was not available, BrewDog would be done.
Right.
Finito. Brewed that day would be nothing more than a microbrewery at that location, and that's it. Not like now it's a major franchise, the fifth most recognized brand in beer in the world.
Amazing. Amazing. So it has been awesome having you on the show, man. I didn't think anybody could really match my enthusiasm. Like I think you're actually more enthusiastic than me. Like people are like, Mike, you're so enthusiastic. I'm like, no, you haven't met Oscar. Like he's more enthusiastic. So Oscar, it's awesome
Thank
having
you.
you on the show. So everybody reach out to Oscar Jofre, Jofre, KoreChain Core. If you're KoreChain and CoreConX, he's leading a revolution here. I want to get funded. I mean, so I'm going to talk to you more about it. So awesome having you on the show.
Thank you.